Hey, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of May the 17th. How was your weekend? Hope it was a great one. You know, this weekend felt like a weekend. Did some riding out in this beautiful weather. We had cool weather, we had hot weather, we had thunder, we had rain. Worked on my boat a little bit, spent time with family. It just felt like a good weekend. Charged for a Monday today. So let's talk about last week's market, what's happening in the market this week. So last week, rates started the week better than they ended. Overall, they ended the week higher as of Thursday and Friday. Why? There was a big sell-off in the bond market on Wednesday because consumer price index, producer price index, some other measures of the economy showed inflation is on its way up, over 2.5%. And we've been talking about this 4 months, that we know inflation's on its way up, probably going to peak midsummer and then maybe taper off. Inflation is bad for mortgage rates. We've talked about that. You can look at some of my past videos to get some definitions of why that's bad. So let's talk about this week. What are we looking at? We're looking at inflation again. We're looking at the Federal Reserve. Are they out of touch? And third is consumer confidence. So inflation. We know that, again, inflation is on its way up, and there's a lot of reasons why this is happening. But a lot of it is disruption to supply. Prices are on the way up. Rates are low, so businesses are investing more in the economy. And I said supply and demand. They can't make stuff fast enough for all the demand that the U.S. economy has. It's something to think about. If inflation is due to debt, if it's due to the debt that we have incurred over the last year and a half, then we're probably going to see rates, mortgage rates, go down in the future. If inflation is due to the outcome of COVID, the restrictions in the economy, people not going back to work, us paying people not, the government paying people not to go back to work, we're probably going to see these rates go up in the future. Here's the truth about mortgage rates. They're always going to go up or they're going to go down. And when they're down, they're typically going to go up. But ultimately, the economy has to pay for all this debt. So are we entering a tipping point? When are we going to know if these rates will go up? When we're on the other side of it, or down when we're on the other side of it. So midsummer seems to be a key date or a key timeline. Second, is the Federal Reserve out of touch? So many Fed chairs are talking this week about what they think the economy is going to do. And some spoke over the weekend about the economy. And basically what they said is, hey, the economy's doing great. Inflation's not a big deal. Debt's not a big deal. Don't worry about it. Economy is going to be roaring along. But there's some information that doesn't indicate that. So are they really instilling confidence? One thing that the Fed has been doing since COVID started is buying billions of dollars in mortgage-backed securities. And really think about it this way. If people feel good about the economy, they're going to put the money in the stock market, the riskier stock market. If they don't feel good about the economy, they're going to put the money in the safer bond market. Well, the Fed has been buying mortgage-backed securities in the bond market to keep rates artificially low so that inspires spending. And they always announce this. They post how much they've been spending. Well, they stopped doing this. They stopped telling the bond traders and the consumers how much money they're buying in mortgage-backed securities, not being transparent, telling everybody everything is hunky-dory and don't worry about the future of the economy when there's some indications that we should be concerned. So really some concerns with some of the traders. How will this affect the rates moving forward this week? We'll watch and see when some of the Fed members speak and give their opinion. And then the third thing is consumer confidence. So if people, again, feel good about what's happening in the economy, money will move from that bond market into the stock market, and that'll typically cause mortgage rates to go up. If they don't feel confident about the future, they don't know where their next paycheck's coming, they'll shift their money from the riskier stock market into the bond market, more trading in the bond market, more buying in mortgage-backed securities, and that causes mortgage rates to go down. So consumer confidence actually has been lowered last week, and it was the first time we've seen this in quite some time. People don't want to buy cars because they're so expensive. I had some clients that are negotiating with the sale of a house, And believe it or not, the washer and dryer are becoming a sticking point, because if the people moving out of the house can't get a washer and dryer for 6 months, they're going to have to go to a laundromat to do their laundry. And the people buying the house, they can't get a washer and dryer, and they want the sellers to leave the washer and dryer. Kind of an interesting sticking point. And this really is an indication of how do the consumers feel about the future. Can they get the stuff they want? Are there disruptions to supply chains, which is an increase to inflation? Are they going to be able to buy the stuff they want? Are they going to be able to have the income that they need moving forward? So again, we'll be watching this. There's some indication, some reports coming out this week that's going to tell us how this will affect mortgage rates. Some other housing data, other reports, housing data is coming out this week. A lot of that, builder confidence, mortgage applications, sales. So nothing that really will affect the market as far as the housing data, but we'll be watching it closely. We're starting the week cautiously floating, and then obviously we'll move to a locking position if we see anything change. We're really in a pretty narrow trading channel this week within the bond market, so we don't expect a lot of movement up and down. There's just some stuff that's going to come out that may cause some volatility. So if you need any advice about mortgage rates, locking your clients' rates, please give me a call. All my information is down below. If you know somebody that benefit from this video, please forward it to them. I'd love to hear some comments. Have a great week, and we'll talk to you soon. Bye-bye.